Good morning, it's Jeffrey Cohen. How are you? U.S. Advanced Computing Infrastructures. We're a registered investment advisory shop here in Highland Park, Illinois. I'm here to talk today about negative beta stocks and how they really have not been a hedge. They really haven't. And so we're very surprised. So we publish negative beta stocks because our model throws them out. We get low beta, high beta, negative beta, and we ran the model maybe it was January 12. We got a bunch of negative beta stocks, which isn't normal, and then we put them out there. And so I'm always fascinated when I see negative beta stocks, and I try to figure out, what are they going to do? And so let's take a look. So if I go to my website and I click on negative beta stocks, I have to go to market information, negative beta stocks. You get a whole explanation there of what they are. And so it implies an inverse relationship between the stock and the stock market. So most people are thinking hedge. Most people are thinking when the market goes down, negative beta stocks go up. When the market goes up, negative beta stocks go down. I get a free and easy hedge. There's a saying, a rising tide lifts all boats. And that makes negative beta stocks an anomaly. So we've been doing negative beta stocks 2-3 years now. We've been studying them. So I thought it was interesting. So I'm going to share with you what I found. So I need to take a quick look at my Corbus pre-market. Corbus pre-market is up almost 10%. And I am really curious about that because I love Corbus. And when I look, normally this stock has a lot of people that want to sell it within a quarter of a penny. And here, pre-market, the first sale at volume is 22 cents. So Corbus looks like it's going to be a tremendous day today for Corbus. So we're going to take a look at that while we keep working here. So, Berkshire Hathaway is a negative beta stock. Chesapeake Utilities, and then there's some memers. Cytokinetics, Houston Energy. You get the dollar index, which is 14% negative beta. U-Haul. So let's be honest, right? When the economy's good, people don't have to throw their stuff in a U-Haul and go across country and try to find a new place to live. Other ones are a little more sophisticated, like VIX, UVIXY. So people will trade the VIX as a hedge against the stock market. It does. It is. The VIX short term has a negative 1.5 times. The VIX 2 times short term has a negative beta of 230%. A small cap bear 3 times shares 2.4. So here's where they are. Negative beta stock, Chicago Quantum. You get the list. We got a whole explanation of them and how we do it. And then we even have another page on details of negative beta stocks and positive beta and how you understand beta. See, beta is really important to us because it mathematically is the systematic risk of a stock. And so we care a lot about it. And so it's very important to our model, to our modeling exercises, right? So I'm going to keep looking here. Corbus down to 1780 pre-market. Still pretty high. Not a lot of buying pressure. 1758, 200 shares. See, what happens is someone will come out and they'll just sell through the entire book. So they'll do like, I'll sell 250 shares. And they'll just take out all the people that have orders in. And I understand that, right? But what is interesting is that if you want to buy the stock now, it's going to be expensive. If you want to buy 100,000 shares, it's going to cost you probably 19 cents. So Corbus is on the move. By the way, the last time it was on the move, it moved for an hour. So Corbus is one you got to watch. So negative beta stocks. So talk to me, Jeffrey. How did they do? So if we look yesterday. So yesterday, the market did great. Market was up. But what's interesting is 4 of the negative beta stocks went up with the market. U-Haul went up. Molecule went up. Houston Energy went up. Cytokinetics went up. But Chesapeake, Berkshire, and TBIO, Telesis Bio, went down. So it's not great. And what's interesting is the market went up, but the VIX also went up. So you would have bet negative beta stocks for the VIX, UVIXY, VIXY, when you would have thought, oh, I'm gonna make bank, right? Market goes up, VIX goes down, less risk. But in fact, no, I'm sorry. The market went up. The VIX normally goes up because you're thinking, oh, there's more risk. In fact, there's less risk, and the market went up. That's actually a perfect storm of excellence. The dollar went down. Now, this is why you have to not just think about negative beta, but think about the underlying meaning of the bet that you're making. So if you're betting that the dollar, right, the dollar is just betting on the dollar. What happens is when the dollar goes up, when the dollar becomes more expensive, so that the euro goes from $1.08 to 99 cents, then earnings of U.S. companies that do business internationally, that do business globally and repatriate their earnings, declare their earnings in U.S. dollars because annual reports are in U.S. dollars, then stocks go down. So the dollar goes up, stocks go down. So when the dollar goes down, stocks go up. Okay. In this case, that held. Dollar's weak. But the reason that the dollar went down wasn't because of earnings. The dollar went down because the Federal Reserve isn't raising interest rates quite as high as they thought they would. That was the whole thing yesterday, right? They raised a quarter point and they kept quantitative tightening the same. But the VIX is interesting. So people will bet all day long with the VIX as a hedge, but it's not really a hedge. It's just negative beta over time. So we saw that, and at one point, the market was down and all the negative beta stocks were down. So let's take a look. What are these negative beta stocks? Berkshire Hathaway, insurance, right? Chesapeake Utilities, Cytokinetics, and I can look at the market caps of these right here. I'll just do sort on market cap. Berkshire Hathaway is a $684 billion market cap. It's not going anywhere. U-Haul is actually $13.5 billion. Cytokinetics at $4 billion. Chesapeake at 2.2 is actually really low. There must be an issue there. Veru small. Molecule really small. Houston Energy is really small. Telekinesis, I don't even see it. And so very interesting. So negative beta. Now if we take a look at high beta stocks yesterday, how did they do? So your high beta stocks went up across the board with one exception, Digital Turbine, which is actually a stock that our model loves. It's really high beta stock. Kind of very controlled movements, very low variance for the amount of beta you get. The other ones are just blow the barn doors off. And you can see that as people bet on the S&P 500, which yesterday went up, I don't know. Haven't been running the model. We don't have any paying clients right now, and I'm like, you know what? I'm not giving away the data for free. Market went up 1%. High beta stocks went up 33%. 6%. I think the median gain was around 5%. So the high beta stocks went up double the beta. Your low beta stocks actually were down for the most part. Your median was a loss. So yesterday was a day to pile into risky names. And let's be honest, negative beta stocks, pile into some of those negative beta stocks so that if the market were to drop, it would go up. Maybe they were making bets for the future. But it's interesting that the VIX, the VIXY and the UVIXY didn't do well. And in fact, your shorts, right? So stock market went up 1%. TZA went down almost 5%. SQQQ went down almost 6.5%. So this was a very aggressive risk-on day yesterday, which punished the price of insurance and actually drove negative beta stocks higher. That's not how it's supposed to work. So this is Jeffrey Cohen. I just want you to know, if you're thinking about negative beta stocks, it's another way to play them. So thank you for watching. You guys take care now. And if you like the work that we do, come check out the website. We actually sell services. They're not cheap. They're actually not really for retail investors. They're for more institutional money managers, professionals. But, you know, it's interesting. Just take a look. I mean, if you really can't afford it and you're not a big money trader, you could direct message me and you could say, Jeff, look, I'm not that guy. I can't spend $2,000 for a day. I can't spend $750 for a run. Maybe we do a charity run. You know, maybe we do something special for you. I'm not going to make it so you can't learn all about stocks because money gets in the way. You'll pay something, but maybe you don't pay the full $750. And honestly, I'm happy to teach. So there you go. Maybe you write a review if you've made money, you found value out of it, right? So I love it. You can do an up run against all the stocks in the stock market. You can also do an up run for $150 against 118 stock tickers of your choosing. You got to give me 10 backups because of the 118. If you gave me bad tickers, I need to be able to swap in some of the other tickers that you gave me. You're going to get pretty much all the same information. You're just going to get it on a smaller data set. And it only costs $150. That's not bad, right? You wrap it up. And at any time, if you want to come to the website, you can see the latest negative beta stocks that we've published. But if you want negative beta stocks from that night, you got to buy a run. You buy a run, it's $750. You get all the negative beta stocks with the exact beta calculations against the S&P 500. If you said, Jeff, I want the negative beta against the QQQ, I can run that for you as well. It's good stuff. So, thanks for watching. You can see Corbus is still at 18 cents. I mean, who knows what's going to happen, right? But I love it, right? I bought Corbus at $1, right? So if this thing goes back up to $1, I'm selling, baby. I love it. I think it's a great stock. I'm in. But it's also one of the highest risky stocks. You know, one last thing. So on January 24th, a whole bunch of stocks halted. And conspiracy theorists would say that the New York Stock Exchange halted them for some nefarious reason. Well, here's the proof against that. If you look yesterday, the stocks that the market halted, about half were down, about half were up. So they're actually a nice, almost like a random mix of stocks that fell, that were halted. So it's probably not a big deal. Let's take a look at the negative beta stocks this morning. How are they trading? I know I was supposed to say goodbye, but pre-market, your ultra shorts are real negative. They're really in the negative because the market's stated to go higher. So if you think that the market's going to turn around and drop later, you want to buy those short, ultra short shorts. You can see that the VIX is down 3.5%, 2%. It's interesting. And your negative beta stocks are all up. So here's the thing. If the S&P futures are up 0.7 and all your negative beta stocks are up, then negative beta is not a hedge. Negative beta is just throwing gasoline on the fire. That's the point of the video. Come on now. These are not hedges. These are still bets with the stock market. The rising tide is going to lift all boats. Those negative beta stocks are not acting like negative beta stocks right now. That's my point. And when you go into the website, I mean, negative beta is a degree of correlation, but it's not causality, right? And it's not a sure thing. They're an anomaly. They're a short-term anomaly. And so, just think about it. right? What do you want to do? So thanks for watching. I think Chicago Quantum or U.S. Advanced Computing Infrastructure is the only investment advisor out there that focuses on negative beta stocks because we love you. And we want you to make money. We want you to be successful. We want you to learn a lot. And we want you to have a great day. Don't just have a good day. Have a great day. Thank you.